we do fractional reserve banking. Banks only keep a very small fraction of reserves on hand for the amount of stuff that they've got outstanding. If you've got a savings account at the bank, there's no money in your account at the bank. There's a ledger entry for how much money you have in your savings account, but there's no money actually there. That money's been lent out, used, etc. To a fractional basis. There's a small fraction of your money at the bank. And so when you show up to make a demand withdrawal, the bank has to meet that obligation. If they don't have the cash on hand, they've got to borrow it overnight until they get the cash resettled back in. So this is this whole overnight lending action that's going on. And normally they borrow overnight at a very low rate, and that it's all okay and it's fully collateralized. They have to put up treasuries or collateral for these loans on an overnight basis. So it's fully collateralized, and it goes off at a very low interest rate. Well, all of a sudden they're having to put up collateral to a very large degree, and they're paying 6, 7, 8% interest rates on overnight money. It's insane, and it suggests that there's a problem within the financial system. The Federal Reserve is having to come in and provide liquidity for these banks on an overnight basis. Shouldn't be happening, but all of a sudden it is. Our suspicion is that there is a banking problem somewhere. And, we've talked about the issue of Deutsche Bank. They're one of the largest banks in the world. They're about 4 times the size of Lehman. They've got about $400 trillion worth of derivatives on their books, and they are the largest number of U.S. banking locations of a foreign bank in the U.S. So there is a lot of potential risk to the financial community because of a bank like Deutsche Bank. And remember what the problem with Lehman was. When Lehman went bankrupt, all of a sudden nobody was willing to do business with Lehman, and everybody really kind of stopped doing business with anybody else. And so the whole credit market froze up, and that's what caused a big problem with the financial markets, was this freezing up of the credit markets. And that's the risk of Deutsche Bank. If Deutsche Bank goes belly up and their price of their stock is really pretty much tracking the price of Lehman heading into the financial crisis, the risk is the counterparty risk. They're a huge counterparty player with all the major banks in the world. So all of a sudden, if there's a financial problem, again, they're about 4 times the size of Lehman, it's a problem, and it's a big problem. Michael Liebowitz, CFA, he is joining us this morning. And of course, if you're watching our live stream right now, you can see he just got back from his overnight job at Walgreens. He's got his work hat on. So yeah, good game last night. Mike lives up in Maryland, so obviously the Nats are his team, and it was a great series. I'm not happy the way it ended, but I know you are. But I mean, hey, y'all took home your first World Series. I think the last time y'all won the World Series was what, like 1932 or something like that.
24.
1924. Wow.
Yeah, but there was about 30 years they didn't have a team here, so it's only 70 years, not 100 years.
Okay, gotcha. It's only 7. So hey, you know what? Congratulations. Y'all played well last night. The reason the Fed cuts rates is to stimulate economic growth. I lower rates so that people go borrow money and put money to work within the economy. And yet the economy is doing okay. There doesn't seem to be a need at this moment to any great degree of using that ammunition to try to spark economic growth. And at the same time we also have this big funding issue that's going on with banks. And the Federal Reserve is now coming in and buying $60 billion a month in short-term T-bills, or claiming that hey, don't worry about it. We're doing this, but don't worry about it. There's nothing really, going on here. It's just something we're doing. There seems to be something else happening that we're not aware of.
Right. Well, here's the other thing that Powell talked about that is not getting much press. And he said it twice in 2 different ways. He said the banks did have money, but they didn't want to lend it. We've talked about this and we've guessed about what it may be. And we keep coming up to that there are decent odds that there is a credit issue going on with possibly Deutsche Bank, some other bank, but there is something behind the scenes going on, which helps explain why the Fed is doing QE, why they're doing so much repo when the banks apparently have money. Shouldn't the banks be lending that money?
Right.
And why they just cut rates for a 3rd time despite growth that is at or slightly above normal.
As you said a second ago, the Fed cuts rates to stimulate economic growth. We're doing this at a time where the economy is still growing, and so the real concern here becomes, what are you going to do if we do have a recession? And on the outside chance that in the next 500 years we actually have a recession, what are you going to do then? because whatever ammunition you had, you've depleted a large chunk of it. You're doing QE, you're buying bills, and yes, you could accelerate that, but you're already using that ammunition now, so you've reduced the effectiveness of whatever you do in the future, and you're cutting rates to 1.5%, which doesn't leave you a whole lot of wiggle room here.
Lance, in the spirit of Halloween, I have a scarier proposal for
Okay,
you.
there you go.
What if we have a recession with inflation? No one thinks inflation is coming, but the Fed just told us they're not going to fight it. At least not fight it until it's much higher. When there is inflation, the Fed cannot lower rates. They cannot print money. In fact, they have to do the opposite. They have to raise rates. They have to pull money out of the system. So the one wild card, and we don't think it's a huge, easy odds bet, but the one wild card that could really trip up the Fed, the markets, the economy, is inflation. And yesterday, Powell told us that they are not going to fight inflation until it's significant and persistent.